Good morning, everybody. We have a mix to lower trade in the grain markets here early on Tuesday morning. It is 6:30 a.m. Central Time. July corn futures down 2.5 cents at 6.57. December corn down 7 3/4 at 5.73.5. July soybeans up 12 1/4 cents at 15.84.5. November soybeans down 2 1/4 at 13.93. July Chicago wheat is down 13 1/4 at 6.61 1/4. July Kansas City wheat is down 14 cents at 6.14. July spring wheat down 3 1/4 at 7.43 1/4. For those of you listening on the podcast, really appreciate it. Leave me a review or a rating if you have not already. If you're watching on YouTube, make sure you hit the subscribe button. Make sure you like these videos. It will help YouTube to spread this stuff around. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. For $49 a month, I offer a subscription service. It includes my morning email, which goes out every business day at 6:30 a.m. Central Time. It includes a text message service, subscriber-only videos, and content that are blasted out at least once a day, and that deal has become extremely popular. This is a monthly subscription. You can cancel it at any time. It's billed to your credit card automatically. There's no other fee. There's no other obligation, no trading account, no acreage fee, nothing like that. This is a standalone deal for $49 a month. You get a ton of information. Certainly check that out if you are seeking some additional assistance. To get into the headlines here this morning, U.S. weather forecasts remain mostly favorable for crop production. And there has not been a whole lot of shift in the forecast necessarily since yesterday. And I think that in this instance, we had lower crop ratings yesterday, and I'll talk about that in a minute. But in this instance, it feels like the market is more focused on the future, being the weather, than the past, which is the crop ratings. That's the way I read this here this morning. The 7-day weather map here from the Weather Prediction Center offers rain for the vast majority of the Corn Belt, at least an inch of rain, up to 2 inches of rain for a lot of these areas of Illinois, Indiana, Iowa, southern Minnesota, Wisconsin, further east, Indiana, Ohio. It should be noted that the northern plains are much drier by comparison. North Dakota, South Dakota, not a ton of relief there. A lot of Nebraska, barring the far eastern section, dry. Southern plains mostly dry. But these rains over the heart of the Corn Belt, these rains in the forecast over the heart of the Corn Belt, certainly a big deal in regard to the market, especially when you consider the timing. Widespread rain across the Corn Belt in late June is bearish to the market and favorable crop production. Here's the 6 to 10 day maps. You could see wetter than normal, cooler than normal for most of the Corn Belt. Again, that wetter than normal, the exception here being the northern plains, North Dakota and a lot of South Dakota, expected to be a little bit lower than normal in terms of precipitation. 8 to 14 day maps look pretty similar, wetter than normal, cooler than normal. So the forecast is still the big deal here, in my opinion. You've got kind of a bearish looking forecast, favorable for crop production. I know a lot of areas this week are still dry and still warm, but according to the forecasts, this is all going to change. Now, we'll talk about the crop progress report. U.S. corn conditions did fall last week. USDA rated the crop 68% good to excellent versus 72 last week and 70 on average. So we saw a 4% decline nationally in the good to excellent category for corn. Traders expected a number near 69%, so we're actually not too far off of the expectations. Notable declines. Conditions in Iowa for corn fell 14% in the good to excellent category to 63% good to excellent. Illinois fell 6% down to 68%. Minnesota declined 11% down to 58% good to excellent. The corn crop is 96% emerged versus 90 last week and 91 on average. So you may have looked at those corn ratings and said to yourself, oh, we should have opened higher last night and we should be higher this morning. And you can make that argument, but I think, at least in my opinion, the market is clearly more focused on forthcoming weather rather than ratings. Soybean conditions also fell. The crop was rated 62% good to excellent nationally, down from 67 last week and 71% on average. Traders expected a number near 65. So again, we expected a decline, but the number was worse than expectations. Soybean conditions in Iowa declined 12% to 61% good to excellent. Illinois declined 10% to 63% good to excellent. Minnesota fell 9%. Ratings in some of the Delta areas fell sharply. Arkansas was down 11%. Mississippi fell 12%. There's been some flooding in those areas. Soybean crop is 94% planted versus 90 last week, 88 on average. The crop is 86% emerged versus 76 last week and 74 on average. U.S. winter wheat crop harvest just getting started here, at least in a lot of areas. 4% harvested nationally versus 2 last week, 15 on average. We have progress in Texas, Oklahoma, Arkansas, California, Missouri, Indiana, and North Carolina. There has been no progress, according to USDA, in Kansas, Nebraska, Colorado, South Dakota, or any of the northwestern states. That crop rated 48% good to excellent in winter wheat versus 50 last week, 53 on average. Spring wheat conditions fell. And I think maybe a lot of people thought that we could have seen an improvement. We saw some rains in some of these spring wheat areas, but the crop was rated 37% good to excellent nationally, down from 38 last week, way below the 71% average. Conditions in North Dakota fell 3% to 29% good to excellent. Minnesota fell 4% to 68% good to excellent. Saw some marginal improvement elsewhere. The crop's 8% headed versus 0 last week, 6 on average. So despite those rains that we saw in the northern plains here over the last couple of weeks, kind of on and off, no improvement to the spring wheat ratings. And you look at the forecast, there's really not a ton of relief in sight here. So I think that this spring wheat situation is still somewhat problematic. NOPA will release May soybean crush data later this morning. Traders estimate that NOPA members crushed 165 million bushels of beans last month. If realized, that would be down about 2.6% versus the same month last year, but up about 3% versus April. USDA did reduce its projection for old crop soybean crush in last week's report. We had softer crush numbers in March and April, and we're looking for kind of a softer crush number here this month. So we're seeing a little bit of rationing, I suppose. USDA projects that crush will account for 48% of demand for old crop U.S. soybeans and 50% of all demand for new crop U.S. soybeans. So, of course, crush typically makes up about half of your demand base for U.S. beans. Exports typically about the other half. The S&P 500 posted yet another record close yesterday. The benchmark U.S. equity index has now rallied a whopping 94% from the March 2020 COVID low, if you want to call it that. Investors waiting on an update from the Fed tomorrow. They're betting that this COVID recovery continues. There's a lot of factors here that could be discussed at length, but it's really amazing that the U.S. stock market on the whole has nearly doubled since that COVID low back last March. Cattle market was able to finish higher yesterday and sharply higher in the feeder cattle market. Most of the fat cattle contracts up at least $1. A lot of your feeder cattle contracts were up over $3. Hog market was a little bit lower yesterday. We'll see what happens today. I think the feeder cattle market likes this lower corn trade. The S&P's up 4 points ahead of the cash open. The Dow's up about 10. Precious metals a little bit lower. We've got the U.S. dollar just a little bit higher. Crude oil is up 73 cents at 71.62 in the July WTI. That market's been pretty strong. Bonds about flat. Everybody have a wonderful day today. I will talk to you same time tomorrow.